reason or anything other than some kind of a military operation or a terrorist activity that might spike it short term. But you know, if you just think about the supply situation, that's what everybody's been talking about. And the truth is, surprisingly, rig counts aren't declining, and they're pumping a ton of shale still in the United States, putting tremendous pressure on the price of Canadian oil, which is landlocked. So, you know, commodities have these big cyclical corrections, and we're having one of them now, particularly in oil. And from this carnage stems great opportunity at some point. I don't know when that's going to be, but we're probably in the 7th inning, maybe the 8th inning. I'm starting to look at energy as an investable sector, but we haven't seen the grown men weeping yet, the capitulation, you know, babies crying in the hands of the shareholders of these companies. And we need that. We need to hear people say when they talk to you, I'll never invest in oil again. That's when I'm going to start putting money to work.
Yeah, we're still not there. And Kevin, a lot of people are saying, you know, we're so focused on the equities, but you really need to also be very much focused on all of those U.S. energy companies that have really accessed the high-yield market. And when you start to see all of that kind of turnover in terms of their debt, that's when maybe we'll see some weeping occur. What do you think?
No, that's true, but we haven't seen those high-yield bonds, those are corporate credits, we haven't seen them blow out yet. In other words, many of them are still trading in the 4 to 5% interest range when they should be at 11 and 12%. And so that's a really good index to look at. So clearly the people that own those bonds think they own bonds in a going concern and that their principal is protected, and they're happy to live on a 5% yield. I'm not that optimistic. I think as this drags out in the low 40s and high 30s, you'll start to see some pain there. But that, in a way, is good. Here's my thinking about why, over the next, let's say, 5 years, the energy sector in Canada could be a good long-term hold. When you have this kind of carnage, and that's what it is, all the weak management gets killed. They all get fired, they lose their jobs, their companies go bankrupt. And even though it's painful, it's a good thing for the industry, because the assets, which stay in the ground, fall into the hands of better managers. And you want to invest in those. So I say let the big spatula come from the heavens and scrape out the energy crap. And let's start again.
Well, right, and I hear you, but you know, you're certainly feeling the pain and the carnage if you're an investor of you at home who's had exposure to this sector. And in particular, Kevin, take a look at Crescent Point Energy decreasing their dividend last week. I think that caught a lot of investors by surprise. Maybe it shouldn't have, but it did, and they're feeling the pain. And so the question is, was that the right move, and is there more to come, whether it's Crescent Point or other companies? What do you say to these viewers and these investors?
Well, whether it was the right move or not, you never want to cut a dividend, except their cash flows are down so materially, they have no choice. But the real lesson here, Catherine, is about portfolio management. And think about it this way. We as Canadians often forget this. Whether you're a corporate institution, a pension fund, or an individual, you still have the same risks in terms of concentration. So here's a rule that works year in, year out, including when energy goes to $30. Never have more than 5% holdings in your portfolio in any one name, like at Crescent Point. But here's the one that Canadians should remember, and it's certainly I've learned the hard way. I never, ever let energy go more than 20% of my portfolio, because I've learned it can break your heart over and over and over again. That goes for any sector. I will never own more. And right now, my holdings in energy are under 7%, because I just won't let myself get more exposed until I feel that the flood is over, that we've seen blood in the streets, the lights go out in Calgary, all the rest of that stuff. Well, that's all coming. And by the way, my heart goes out to those Calgarians. Believe me, I'm feeling their pain. Not only do they have this correction in the commodity, they've got a government that has no idea what they're doing.
But, Kevin, government aside, I mean, what could any government do with prices of crude at these levels?
Catherine, I'm so glad you asked me that. You know, because
now
every time I look at Calgary,
I
want to weep like a baby. Here's what they should have done. They should have lowered corporate tax rates by 20%, not increased them on this carnage. They should have lowered royalties with the promise they'll raise them when good times come back. They should have bankrolled this sector in a way to keep jobs intact. They did none of that, and the reason is They don't know what they're doing. It's that simple. And by the way, this has political ramifications. And I don't endorse any political party. I'm agnostic. I don't care. I don't care who's running Calgary. But I'll tell you this. In this federal election coming up, the other two parties are going to be able to point a finger at the flames burning in Calgary saying, look at what those guys did to you. Do you want them doing this to you federally? They'll never get a federal mandate with this kind of action. But that's what they've done. They've hurt their party. Shame.
But again, Kevin, at the same time, too, though, a lot of people would say, what's the government going to do when the real culprit, many would say, is, in fact, the price of crude, which shocked people by declining 50%.
But, Catherine, nobody believes the price of crude will stay at $35 or $42 or whatever it's going to be when it bottoms out forever. The balance and the role of good government and good governance of a province that's highly acclaimed and attached to the assets of oil is to act as a governor to the peaks and valleys, to act as a partner to the industry that employs all those people and provides all the taxes that provides all those great social benefits people enjoy in Calgary. Not to be an enemy of the hand that feeds you, which is what the Alberta government is. They're actually the enemy of the industry that provides everything for them. It seems insane, but it's true. That's why I call it a horror movie. You can't believe it. You think it came from Hollywood? No, it's happening right now.
You can't believe it. You've said in the past that it was a bad movie, and now you're calling it a horror movie. Does it get worse? What's next?
I'm in my third box of popcorn watching it. It's unbelievable. The ending keeps getting scarier. It just keeps getting scarier. I say to myself, how bad can it get?
You wouldn't be able to sit there and eat popcorn if that were true.
I'm looking at it saying to myself, we still don't know what the royalty rates are going to be. There's still so uncertainty. There's so much capital not going there. I want this fixed for the sake of every Calgarian, every Albertan, and every Canadian. I honestly feel if there was a way to litigate that government, to sue them for malfeasance, I would do it. I just don't know if there's any structure available to me to do that in Canada.
There probably isn't, Kevin. I'll save you the time.
I'm probably very popular with them, too.
I'm sure you are. But you don't really worry about that.
Needless to say, I haven't gotten any speaking engagements from the Alberta government lately, Catherine.
Oh, dear. Somebody will, I'm sure. Kevin, good to see you. Thank you so much.
Take care. Bye-bye.
All right. See you later. That's Kevin O'Leary.